All right. Hello, everybody. Welcome back to the channel. It is Saturday, 3 p.m. Eastern. If you are in Sweden, it is 9 p.m. Eastern. And we are here, whether it's 3 p.m. or 9 p.m. across the world, to talk about one simple thing, which is this idea, this concept. If anyone has ever watched the movie Inception, it's all about an idea that permeates your mind and then influences the course of action for the rest of your life. If we can incept, or at least if Emir can incept this idea into your mind today, you might make a lot of money based on if this idea has any relevance, which is PayPal the greatest opportunity right now in the markets? Before we get into it, Emir, I want you to give a little bit of a background on who the hell you are. You just published your first article today that I put in the chat. Why have you officially published an article on Seeking Alpha? And why should people listen to you when it comes to the equity markets?
Wait, is that a Wejo cap? When did you get that?
Yes, it is.
Did they have like a merch store, or did he sponsor you?
No, they invited me to one of their Las Vegas events, and he gave me the hat. Richard Barlow, the CEO, and so now I just wear the hat.
You're rocking that even now. Nice.
Yeah, even now.
Yeah, no, I've just been. I'm a private investor, and I've been gaining some traction on Twitter/X lately.
Not just some. You have 4,400 followers. I just want to say that. So that's not an easy thing to do.
Thanks to you.
Yeah, but regardless, 4,400 is difficult.
Yeah, Amit has been pushing me to post more. I'm like, nah, I don't feel like doing it if I can't provide any sort of value. So I usually never post anything unless I feel like I have something of value to share. And I never really put all my thoughts into long form. And some of my friends actually told me, well, you should really give it a try. So I authored my first Seeking Alpha article. I think it was published today or late at night yesterday, and it's been doing pretty well on Seeking Alpha, actually. So I'm surprised. I'm not surprised since it's covering PayPal, which is gaining quite a lot of attention recently, either positive or negative, depending on who you ask. But I think it's a very interesting stock with an interesting outlook and interesting perception by the market, one which I don't agree with. So let's see if you guys agree with me today or if you disagree with me, and would love to have a discussion.
You know, what also is interesting is this girl. Why is she there?
The Palantir one?
Yeah, why is she?
She's analyzing Palantir. Can't you see that? Actually, you might not know this, Amit. I don't think you followed me back then, but the start of 2023, I was using Midjourney a lot, and I started to generate a lot of Palantir-related images, and all of them were animated.
No, I remember you were posting the girl and a bunch of like random stats, right?
Yeah, like whenever Carp would say something, I would like encapsulate that with like Midjourney, and I would not only post the text, because I read that the Twitter algorithm favors if you have an image, but if Carp is just speaking, like I just don't want to copy paste Carp every image, so I would like use Midjourney to generate something, and that actually got me a lot of followers. I think it was Arnie's idea, actually, so I just executed on that. It was quite fun for a while. I learned, actually, no joke, I learned a lot about prompt engineering, and it actually helped me to incorporate ChatGPT and Bard a lot in my actual daily work, how I should input my prompts to get what I want, like in terms of code or whatever else. So actually, memeing on Twitter actually helped me learn a lot. Very useful.
Now, correct me if I'm wrong, but Palantir used to be your number one position. The stock ran up a lot in 2023, about 160%, and you obviously trimmed a little bit. And that trimming resulted in PayPal now becoming a number one position in your portfolio. Is that correct?
Yeah, as of right now, yes.
Could you disclose what percentage of the portfolio it is?
PayPal?
Yeah.
60 perhaps. So it's not 60. Even close to Palantir. I had my whole portfolio in Palantir when it was around 5 and 6. So I was 100% all in Palantir because I just saw such an asymmetry. I was like, this is ridiculous. Yeah. So I went all in. I slept very well. Some people say that it's incredibly risky, and I just disproved that to myself. I was like, okay, what does Palantir need to do to like make them worth $5 or $6 per share? And I just couldn't make the math work. So I felt very comfortable having my portfolio in Palantir, and now I feel very comfortable having an outsized position in PayPal as well.
And then the reason I wanted to bring that up is because you're very unique in my eyes in terms of, you and me talk pretty much every week, every other day. We're usually in contact, and the respect I've gained for you in terms of just valuation and the way you look at the markets is profound. And Palantir, even though it's seen as a meme stock, hype stock, all that stuff, at $5-6, the valuation was very obvious, or at least there was an asymmetric, non-obvious, that was obvious bet you could make, and you went all in. So I respect you in that when you see an asymmetric opportunity, you do take it. You're not just like, oh, I'm only going to be in Coca-Cola because it's my value investing principles. Like, no, if something is value oriented, you're going to go into it, which explains to me and gives me a deeper respect for your decision to be 60% in PayPal. And I want to know, and I think the audience deserves to know, how are you using the same logic you used for Palantir at 5 or 6 to now get into PayPal, basically more than half of your portfolio? So I think let's start the conversation there. We have a lot to talk about in terms of numbers and all that stuff, but high level overview, what got you excited about PayPal? And then we'll get into the specifics of it.
I mean, the same goes for Palantir. Usually when you are valuing companies, I mean, you might find 2 or 3 opportunities per year. It's very time intensive. It's not like pricing where you could easily look at multiples compared to different companies. I mean, this is more like a vacuum where you are challenging yourself to project what the company will do. And if you're looking at a company that's not beaten down, odds are you're probably wasting your time valuing it, because it will either be very close to fair value or it will be very overvalued and you just wasted your time. So when I see that a perceived stable business starts to crash in stock price, it gets me interested to see, okay, what's going on here? And that's how I came into PayPal. I was like, okay, what is the market expecting here? Why is it so beat down? And is it justified? And when I find out what the market is expecting, the next question is, well, are they right or are they wrong? So I just start to disprove that or prove the market wrong to see if I'm seeing something the market isn't. And usually you only find those opportunities when you look where it's darkest.
Right.
For example, a company that has a lot of perceived risk, you will probably find something interesting. Beaten down companies can present opportunities, or even like companies going to the moon can still like be actual value, depending. But I mean, you're more likely to find them in the darker corners of the world, if you would put it that way.
So you got introduced to PayPal, I think, like a couple months ago, early in the summer, when you started to see the valuation becoming ridiculous. I think in the like early 50s. I mean, it was almost touching $49 in that range. Now it's at around $60. So let's start the conversation here. Why is PayPal's valuation something that you think is the best opportunity in the stock market right now? And you can pull up any charts or any articles.
It's the best one that I've came across, and I've looked at a lot of companies. But the reason is because it presents a unique opportunity because we have such a margin of safety. What
does that mean? What does the word margin of safety mean? Can you define that?
The margin of safety in this case is that the market is expecting PayPal to stop growing as of 2023. After 2023, they're expecting zero growth, like literally zero. So every time you find a vertical that grows within the company or that moves the company forward, it pushes the intrinsic value up, right? Any sort of growth that you can find will give you a higher valuation, which means that as long as the company doesn't stop growing, which the market is implying that it will, you're going to make money. So that's the margin of safety here. Of course, there are risks of PayPal could stop growing. It could go negative. But the margin of safety in this case is that I find it so highly unlikely that I'm not... it's so improbable that I'm not worried about it at all. So that's the margin of safety here.
I'm going to pull up your article. Let me know if I'm on the right chart. But I want you to prove to us why the market is pricing it in for literally zero growth. Is this the right chart that I should be looking at?
No, the first image.
Okay, this one.
The first model. That one, yeah.
Oh, here we go. Okay. So yeah, walk us through why, or how can you
come
to
click it, I think.
We can click it. Oh, perfect. Why is the market
high fidelity in here?
Yes, that's correct. Okay, now I see it. So 0%, 0%, 0%. So 2023, the market has put in revenue growth of 7.62%. That's 29.6 billion. So the market, as you projected to 2033, has 0% growth, meaning they're doing 29.6 billion, the same they did last year, every year for the next 10 years. And that is how you come to a share price of $55, correct?
Well, the revenues are not the important one. It's just a catalyst for the free cash flows, which is what we're looking at in a DCF model. So what you do is you take future cash flows and you project, discount it to present value, and that's how you get that value for the company, which is called the intrinsic value. It's the actual output of taking future growth and discounting it to today.
So you have them at 4 billion in free cash flow for the next 10 years, or you think that's what the market is pricing them at?
Yeah. The output of that, if you have them just stagnant 0, will give you a value per share of 55. I think I used a discount rate of 10%.
Okay.
And the 3% terminal growth. So it actually expects PayPal to grow with the economy after this period.
Right.
But yeah, so basically the market is telling us that no, PayPal is not going to grow. So okay, so my first thinking is, okay, is that likely or is it unlikely? And that's what the article goes into. Like, okay, why would it be unlikely for PayPal to stop growing? And then I just go into a section by section where I see high growth opportunities for PayPal, basically disproving the market.
So given the valuation right now, and on your DCF model, which you put in some reasonably fair assumptions, the market's basically saying the stock's worth 55 if over the next 10 years the free cash flow stays the same and the free cash flow margin stays the same as well. Your argument to the market, which is why you have 60% of it in your portfolio, is that that's not going to happen, that they're going to grow more than 0%. And if they're going to grow more than 0%, this is a criminally undervalued company. So let's talk about the reasons for why it's going to grow. Give me, I guess, your first headline reason why you think PayPal will grow more than 0% for the next 10 years.
Just jumping out of the article, just talking freely about it. The first reason is that the digital payments market is growing at 13%. I mean, this is not a dying market. I mean, we're going into a cashless society globally at an increasingly fast pace. And they are a majority player within digital payments. So if the digital payments market is growing 13%, PayPal needs to actively lose a large market share period after period for that to be true. So the first reason is the market itself is growing at 13%, which is a pretty rapid clip. I think it's to 2030 in the article.
Right.
I think I sourced the Statista, which has the projections for the digital payments market. And as of right now, they have a 25% share of the digital payments market if you just look at total volume. So they would have to shrink, a lot to not take part of that growth.
I want to pull this up. I want you to explain this picture to me because I think this one also is very interesting I've never seen this picture before in the PayPal world. Why is this picture kind of proving your point around PayPal not necessarily dying out yet?
I mean, this is just, I think Crossroads posted this on Twitter, and I thought it was very interesting. I don't think most people realize how popular PayPal is as a payments option. Basically, outside of the Americas, PayPal is king. But these percentages are not flat because I think they only count like the top 10 options. So if it says 25% for Africa, it's not actually 25% of the total, just of the top 10% providers, I think. So this was like the first head scratcher, just to get the people thinking like, okay, PayPal is a dying business, right? But it's so popular globally. And I think another thing here is that people don't understand what PayPal does. I mean, people associate PayPal with I'm sending money to a friend or I'm checking out using PayPal, and that's it, right? But
Right.
I mean, they own a whole payments ecosystem. I mean, it's so vast and people don't understand that. So that's also a thing we should get into.
Okay, before we get into that, what is your argument against the fact that there is just simply too much competition? I mean, maybe this kind of goes into the argument about the payments ecosystem, so you can take it there. Like I've heard Apple Pay, I've heard Cash App, I've heard these things that are eating at PayPal's lunch. Even yesterday, Shopify president Harley Finkelstein tweeted that a company that is a really popular e-commerce brand that's not using Shopify for their backend analytics is using Shopify Pay underneath the PayPal option, which is, Shopify is trying to enter into this world. So if the market's future looking and the market's like, look, maybe Emir is right. Maybe it is undervalued, but there's so many people coming from every different direction trying to take away a little bit of PayPal's user base. Is the market at least somewhat correct that is a reason for why the stock should not be priced at a higher multiple?
Yeah, it's very real. But can you actually bring up one of the charts from the article?
Yes.
Which shows PayPal's market share of the total digital payment space. Yeah. I think it's one of the first ones.
Yep.
Yeah. Apple Pay came out in 2013, I think. Cash App has been around for very long. And what has PayPal's volume done in terms of the global digital commerce transaction value here? Has it been growing or has it been declining during the period where Apple Pay has actually been a factor? For example, I mean, when did the Stripe start their activities? When did Adyen come to market?
Right.
And they've been growing. I mean, it is a competitive space. What I think PayPal themselves say, I recall Peggy, which has recently changed position, which is high management. One of PayPal's own arguments here is that they offer a complete solution. So basically, if we take the actual checkout as an option, Apple Pay is a competitor, right? Visa, MasterCard are competitors. If you take the processing space, then you have Stripe, Adyen. If you have the wallet, the remittances, and those kind of transfers, you have the banks as your competition. So, but no one does all three segments, and no one can tie together the whole ecosystem. So I know that they're working on a roadmap where they incorporate all of their products. It's basically, speaking of Apple, people have an iPhone, they have a Mac, they're within that ecosystem. So even though they might think like, well, Android is pretty cool, but I'm already ingrained in this ecosystem. I think there are a lot of factors like that that keeps PayPal ahead. And also their sheer massive scale is unparalleled. When we get to the processing thing, which is actually the growth vector that's showing most velocity, I mean, it's growing the fastest. There they have an actual moat, which is untouchable by either Stripe or Adyen, in my opinion.
Let's get into that then. Yeah, let's talk about that. So this is the moat you think that exists. Okay, so let me pull up the article.
It's not in the article.
Oh, it's not. Okay.
I'm saving that for a separate one. But basically,
you've already got part two. You're really becoming a content creator. You are right. You're like, I'm going to separate this.
I mean, I hit the word cap, so I couldn't fit it in. I mean, I wanted to write a lot more, but I couldn't. But basically, PayPal have what they call the vault, where they store all the information from all the transactions, of course, in accordance with law, GDPR and other things. But basically, this will allow them to move into next gen checkouts. Basically, one of their ideas is that you basically just use one click to check out. I mean, no more entering credentials, logging in, basically checking out with one click. But that's not really, the customer is one thing, but you need to sell this to companies, right? Why is this valuable to companies? Well, having this whole vast data store, I think they have something like 25% of all issued credit cards stored, which means that they processed at 25% of all cards in circulation. It means that they will be able to recognize what customers have been shopping. They have like all the receipts. They know what the customer likes and how valuable is it for example, ads targeting. If you're browsing on a website, you can target that customer much more easily, because you know that this type of person shops this. Or when they check out, you know that when they buy a laptop, they want to use their business card. But when they buy diapers, they want to use their personal card.
Right.
And it will automatically help you with that and make it as frictionless as possible.
And you're saying this is a moat because you're saying Cash App and Apple, they can't really replicate an entire ecosystem.
No. No one can compete with the vast data store. They have so much data on consumers that have used their products, and no one can compete with that. So you can incorporate that with their latest checkout solution, which they are starting to roll out, called PayPal Complete Payments, which is aimed at small and medium-sized businesses. And you can also use it for Braintree, which is their like high-end customizable processing checkout solution. So it's getting, I mean, people think that they are a dinosaur, that they're not inventing new technology, that they're not evolving, but they're actually doing a lot on the back end to make the checkout experience as frictionless as possible. I mean, the conversion rate today on average is about 5%. And I know the CEO said, like, people are scared about margins left and right. If you could take that 5% checkout rate to 10 or 15%, I mean, the conversion rate, I mean, it's such a vast scale that moving take rates from 1 to 2% means nothing in the grand scheme of things.
Correct.
So they're like working with a bigger picture in mind. And
let me ask this question real quick. Why don't you think they've capitalized on this data set before, or do you think they have been, but the market just hasn't noticed?
They weren't able to, because the solutions they had in place, I mean, you have to think like this. I think the figure was about 80% of Americans used PayPal in December. And if you ask those, like, no one knows that they use PayPal, because it's integrated into so many online web stores and services that you are using it without even knowing it. Like you might purchase something with Apple Pay, you might purchase something with your Visa card, and you don't even know that it's powered by PayPal. So the issue they had was that these were legacy solutions, and you can't have downtime to upgrade these solutions, right? Imagine you're a web store. You can't just take the store down, like, well, sorry guys, maintenance on the web, because it means loss of customers. And the way they solve that now is that they are using their channel partners. I know that Shopify is a big one. I know they have some others, but Shopify is the main one where they power the checkout solution. So with their latest one, they can actually seamlessly integrate new features rolling out with very low latency. Like, it doesn't affect the actual production or the actual user experience. So the reason they haven't done it before is that they weren't able to. They didn't have the technology in place to actually roll out all these features. But with the new gen checkout, they are able to.
Now, I want to quickly speak on Braintree, and then we'll get to Alexx Chriss. This is the back-end architecture for PayPal. I believe this, if I'm not correct, if I'm not wrong, is growing 30% year over year. So top-line growth is at like 8 or 9% year over year, but this is the part that's growing a lot internally. Do you think that is also part of the moat that the market is really not understanding that can lead to more top-line growth?
Yeah, people don't understand it. I mean, we can assume that it's growing 30%. I mean, that's the latest reported figure. I mean, they have been inconsistent in reporting the numbers. But yeah, the last we saw was always over 30%. I think they reported 3 quarters like that. So yeah, I think it's the fastest growing one. And it's basically, to me, the future of PayPal.
Would you agree it's similar to Amazon's AWS?
Braintree?
Yeah, not in terms of like literally AWS, but in terms of that thing that Amazon's working on for years that the market doesn't get, and then, you know, eventually it scales.
I think it's underappreciated. I don't think it's as massive as AWS, but basically, I don't think Braintree is the main one. Braintree just is aimed at large corporations, right? So take like Airbnb, for example, where you can customize it to the client. The big one that will start to scale massively is PayPal Complete Payments, PPCP, which is aimed at small to medium-sized businesses. Instead of having to, you know how like Palantir has to send in engineers to like solve a problem.
Mm-hmm.
Like it takes a lot of time, it's expensive. Whereas PPCP is like already a solution that's you don't customize it, you just use it. It's plug and play.
Right.
And I think just looking at Alexx Chriss, he ran small and medium-sized businesses for Intuit, and that's like grew to be like more than half of that business. I think he has a lot of experience in that space and that segment. So I think scaling up PPCP will be the biggest growth driver for PayPal moving forward, more than Braintree, I think.
Okay. Let's talk about buy now, pay later. I'm going to pull up the chart you have in the article, but what is so exciting about buy now, pay later? A lot of companies do it. Affirm is, I guess, I don't know if they have the largest market share, but they are the ones that are kind of the premier name here. Does PayPal have an opportunity to really build that business out as well?
I think they have the largest market share.
Oh,
in that
Affirm?
space.
Okay.
No, PayPal.
Oh, PayPal. Okay.
I think so. I didn't put it in the article, but I recall listening to the former CEO, Dan Schulman, talk about how it's been like it has the highest net promoter score of any buy now, pay later solution. I mean, it's the most widely used one. I think it was at the JP Morgan conference, but I mean, I think it's a market leader already. But the problem here is that it's such a small part of PayPal. I mean, looking at total payment volume, it's just 6 billion, and we're talking like trillions, right? So it's kind of tiny as of right now. But I think the margins are more flattering in the buy now, pay later compared to the other segments. I mean, PayPal has like a take rate of, I think, 0.8% as of the latest quarter. Let me double check that so I don't lie. I have all the quarters noted down. So.
Well, you know that. Yeah, that's why this is a good article.
Yeah.
You have all the numbers.
0.79% as of Q3, like take rate of the total payment volume. Like it's tiny. But this segment has a lot of higher margins, and I think it's really set to do well. I mean, I quoted a Fidelity research paper where the younger generations are saving less, and their spending habits like don't slow down, even though the economy is doing really poorly. I mean, they save less, they spend more, and that trend seems to continue. And how do you do that? Well, buy now, pay later is like at the forefront of how people fund their lavish lifestyles, even though they might not be able to afford it.
Right.
I think buy now, pay later is really evil the way it exists. But I mean, I'm here to exploit you if you want to use it, you know? So spending is not slowing down. Younger generations are spending more than older ones. They're saving less. And also, well, I lost my train of thought.
Yeah, no, I agree with you. I think buy now, pay later is very interesting. I'm not really the biggest fan of the concept of buy now, pay later, but it is a part of PayPal that is growing.
The last part was I quoted the Visa latest earning quarters, basically saying that people are not slowing down spending, and they need to fund that spending somehow. And I think buy now, pay later will be at the forefront of that. Is what I wanted to say.
Got it. Okay. Let's talk about Alexx Chriss. Are you excited about this guy? And do you think that the market should give him a chance? I mean, the old guy, he finally left. Dan Schulman, yeah, and that was an issue with PayPal as well, just in terms of uncertainty. Do you think Chriss is bringing in some much needed clarity given his background into it?
I think PayPal was in a really bad place. Strategy-wise, the roadmap was muddied. I mean, they were serial acquirers of companies that didn't really fit in to the whole ecosystem of PayPal. They had a lot of liquidity from the COVID era where digital spending went haywire. They're like, what do we do with all this money? And there was no real focus within the company. And that's when a lot of the super investors started to pull out, like, what are they doing? I know Terry Smith is a major one that was invested in PayPal and just exited the company completely. And so I think change was needed, but I don't think he's going to be a savior. I think they laid out the roadmap pretty clearly in their, they had like a management meeting where they laid out the whole roadmap moving forwards, and it was on their investor relations site, so you could take part of it as an investor.
Right.
And it was pretty clear, and Alexx Chriss so far is echoing a lot of that. I mean, they're not changing everything. I think they have really focused people in the senior management. John Kim, great guy, very focused. They have Peggy, they have Gabrielle still, and Alexx Chriss. I mean, he's coming in to bring structure to everything. I know one thing that I was really bothered by is the inconsistency in how PayPal report numbers. For example, we talked about the processing numbers growing at 30%. I mean, they suddenly just stopped reporting on that. Like, why?
Right.
Either it's doing so well that they want to like keep their cards close to their chest and not show anyone what they're doing because it's doing so well, or it's doing really poorly. So he spoke a lot about bringing transparency to PayPal. I think Wall Street is going to like that and reward that. And I think just his experience, I mean, he was clear, I'm going to bring experienced people into PayPal, and he started recruiting like his former colleagues that he knows are good people. I mean, he's bringing a lot of seniority in like frat party, you know, like it was very unfocused over at PayPal. I think I have confidence in him from what I've seen. I was really impressed by the Q3 earnings call, and I'm curious to see what he's going to do. I mean, he doesn't have to invent the wheel over at PayPal. I mean, they have a roadmap, but I think he's going to bring a lot of clarity and focus to the company.
Let's do this question from the chat. I think it's really interesting. Amit, how about the fact that the biggest two countries don't even use PayPal? Their markets are happy with their own payment system. I believe he's talking about China and India. My take on that is that China, I guess, right? Like they don't even use Facebook or Google. So like those American companies are already, they kind of have to factor in their TAM.
China uses PayPal. I think a fun fact is like PayPal operate in China without having a subsidiary in China. It's like really unique that they're not like opening their rear to the CCP in that regard. I think they're really unique there. But no, they operate there. And I think they've gained a lot of notoriety with Temu. I think is the
yes.
Yeah, it's massive. So no, they operate in China and they benefit from Chinese spending and Chinese companies growing over there. So no. As for India, I don't know about India. Sorry.
Yeah, but I think your overall argument would be that even if they don't operate in two of the biggest countries, I mean, they still have a lot of room to grow, regardless. You know, if they're ever.
Let's go back to the base argument here. The market is implying that PayPal will not grow. Everything we are talking about here, will it provide some growth? Any growth? If the answer is yes, then it's undervalued, right? So if we can find any evidence of any sort of growth, like let's not talk about PayPal becoming like the next Microsoft. I mean, that's not what we're discussing. We're discussing, can PayPal grow at all? And if the answer is yes, then it's an opportunity here. So they don't have to dominate every market that's out there. They don't have to own every product segment that's out there. I mean, we have to find evidence of can they keep growing? And if the answer is yes, then it's undervalued.
Okay,
we touched on a few of those so far.
Let's quickly talk about Venmo as well, because we haven't talked about that. So Venmo is something that I've used for like the past 10 years. I don't really know if Venmo makes money for the company or how they think about that, but what is your argument for why Venmo is a good part of the thesis?
I mean, it's a lot bigger than the buy now, pay later one. They process a lot, but it's really stagnating. I don't think they're innovating on that end. I think it's really mismanaged for Venmo. I think they could do a lot more. I mean, we saw them trying with Amazon. So you can actually check out using Venmo at Amazon for a time, and they pulled that back. I don't know if it was Amazon or PayPal or both that were dissatisfied, but I mean, they're not really doing much with it. There's no, in recent history, they haven't really discussed Venmo and how they would evolve Venmo into something bigger. I mean,
you know, it's really interesting because they tried the social aspect of it, right? Of like, you can see what your friends are buying and all this stuff. And I don't know if that ever really took off. Like, it never became a social network, but it's still easy to use, right? Like, if like people, I pay your rent through Venmo, you just send people money very quickly.
Yeah, it's a good product. I don't see it not growing, but I mean, it's really stagnating in terms of growth. I mean, there's no real clear roadmap. Like, what do we want to do with this? Do we want to make like a super app? Do we want to integrate it more? Do we want to make it a recognized checkout option? Do we want to add value to current customers by doing this? I mean, they're not even discussing it. So I'm a bit saddened by that. But if we look at it the other way, I mean, Cash App itself, I mean, at least the comparative features isn't growing either. If you just look at the transactions, I think Cash App only grew like 2% year over year. So it's not doing much better either. I think Cash App is being carried by the Bitcoin segment of it when I last checked the filings. So, I mean, they're not alone in that, but I would like some commentary regarding Venmo moving forwards. I don't think it's going to stop growing completely. I don't think it's going to shrink. I mean, I think it's a very useful app. It's a very popular app, and it's a lost opportunity as of right now, but I don't think it's going to stop growing.
Okay, so overall, you think the market is missing out on the moat in terms of a competitive ecosystem that it has, Braintree that's growing 30% year over year in the background, buy now, pay later that is still growing, Alexx Chriss' management experience and what he's really bringing in terms of new life to PayPal, and the sort of comprehensive set of global users right now at 430 million. Like whenever someone says no one uses PayPal, is your argument that if 430 million people are using it or at least actively signed up for it, it's hard to imagine Black Friday, 25% year over year sales growth in terms of GMV. It's hard. I guess that's the question. What is your argument to people that just blatantly say no one uses PayPal anymore?
That they used it themselves without knowing it, right?
It's a good answer.
I mean, likely. I mean, the active accounts is a funny metric because it looks like it's shrinking, right?
Right.
It has been shrinking in total numbers, but that's for a reason. They are actively churning poor quality accounts. As we mentioned, PayPal was very unfocused for a while. They ran some campaigns, some offerings where a lot of low quality accounts signed up, mainly from Latin America, where they just used the offers and never touched their accounts again. I mean, it's worthless to have them. So they're actively churning low quality accounts. So it's an active decision to decrease their overall numbers. But if you actually look at the total spending of the accounts, it's going up in total, despite the accounts being lower. So the current customers are actually doing more. They're spending more. They are transacting more, like in total transactions as well. It's not only that they're spending more per transaction, they're actually transacting more. So they're increasing their overall value as customers, as active accounts. So it's not doom and gloom like the actual number might make you believe. I mean, it's an active decision that they've actually said themselves on multiple occasions, like, no, we messed up, we were unfocused, we got a lot of low quality accounts, we're going to churn those. And the actual financials, the result from those accounts is actually going up. So I don't think it's a risk at all as of right now.
I have two questions in terms of the stock. What is your exit strategy on the stock? When do you begin start making it less than 60% of the portfolio?
As we edge closer to fair value, and that's not like a definite term, right? You don't just value a company once and then just leave it at that. I mean, it's an active process. Valuations change as the outlook changes. Like by next quarter, we might find out something which makes me raise my value for the company, or it might decrease. So as we edge to fair value, I think I will start to make some decisions like what do I want to do here. But I mean, I'm looking at more than 100% upside just to reach fair value before I'm even there.
So your fair value is $120 a share?
111 intrinsic value. So roughly. But I mean, usually I buy quality companies and I don't have an exit strategy for them. You know, I sell if I'm wrong or if it's just absurdly expensive. I mean, let's take Palantir, for example.
Right.
My intrinsic value for Palantir when I was trimming it at 20, when Palantir was trading at $21, and my intrinsic value is at 12. I mean, I trimmed some because it felt so absurdly expensive, and the price is incorporating such perfect results that I just thought this is unlikely. So if it gets too expensive, like absurdly expensive, or if I'm wrong, then I will start to consider selling.
Right. Okay. And then what is the bear case for why 60% of your portfolio goes to shit or you take your losses on PayPal? What has to happen, and what is the time frame on which you're willing to give the company some grace to be able to execute?
The time frame. I mean,
Like
until I see that I'm wrong in the numbers. Yeah. If they actually can't execute, if they're actively losing more market share than, like we know that the market is gonna grow at a 30% CAGR. They have to lose more than 13% to actually start to lose market share to that point where they're not growing at all. So if we actually see like, oh no, PayPal isn't growing, like they're losing everywhere. They're losing to the banks, they're losing to the checkout solutions, they're losing to the processing options out there, and badly, that's when I know that I'm wrong. And I know the risks are there. But as we mentioned in the beginning, there's so much margin of safety here that I'm not worrying about it at all. I'm sleeping very well currently.
Okay. That makes a lot of sense. Let's do some, put any questions in the chat for anyone that has any specific things on Emir. I think this is a really good comprehensive understanding of PayPal. And here's the Seeking Alpha article in the description again in the chat. Jacob says, I'm up 122% on Meta. I think I'll sell it for PayPal. Obviously, it's not financial advice, but would you kind of think, I mean, a lot of people compare Meta at 88 to PayPal at 60. Meta did a 3X. I don't know if PayPal does a 3X, but does it make sense to kind of descale out of Meta at all-time highs and try to go into PayPal?
Not based on how much you made on a stock. I don't think. If you think that it's getting expensive, then you should consider reallocating perhaps. But just looking flat, like I'm up a lot on this stock, but if it's still cheap, then I mean, there's no reason to sell, right? So
okay,
you have to ask yourself, what is Meta worth and what is PayPal worth? And
Crossroads says buybacks. This is something we forgot to talk about. We should do that. I think the stat is they're buying back like 5 billion, 4.9 billion this year or 2023, which is like 5% of the float they were taking back in.
I think they said at one occasion they're buying back using 80% of their free cash flow per quarter, which is roughly something that Apple was doing when Warren Buffett decided to buy Apple. So it's the same scenario there. I mean, they're actively buying back, and it's what I would do too. I mean, if you're gonna do buybacks, you do it when you're so absurdly undervalued that, like, investing in yourself is returning great shareholder value here. So it's great. I don't have the exact figures in my head or what's projected. I mean, Alexx Chriss could come and say next quarter, like, yes, we had the buyback strategy, but here's how we're going to use the cash instead. So we don't know how the future is going to look, but I mean, great decision to actively repurchase their shares.
Yeah, the buybacks are very interesting. And the buybacks are very, very interesting. And as you said, it's like a kind of an Apple scenario in terms of just how, because I think they also believe that it's undervalued as well. What are you looking for in next earnings if you have to pick a couple of metrics that you actually care about?
The first one is that I want to see more consistent reporting. I want them to actually give us clearer numbers, consumer versus enterprise. We don't have numbers like that. I mean, I just want more transparency in the numbers. It's been very muddy waters, and Wall Street doesn't like that, and could perhaps explain why the stock is trading the way it is. So I want the promised transparency, and I'm not expecting too much of a change. I mean, it's not a dying company. I mean, they're doing decently. I mean, it's not a broken company. It's a broken stock, right?
All right.
And I'm not expecting too much from Alexx Chriss 2 quarters in. But during fiscal year 2024, I actively want to see some changes if I'm to believe that this is a re-acceleration story. If this is a growth story or moving into one, then we need to see some evidence of that. I mean, we're talking about all these new next-gen checkout solutions, how they're going to leverage their vast data stores. I mean, we need to see execution on that. We've been hearing it for more than a year now. I mean, this is not something recent. I mean, Dan Schulman has talked about this for a long time, and it's time to start executing on that. And I'm expecting that during 2024. We're going to see some evidence of actual re-acceleration here. But even if they don't, I don't necessarily think I'm going to sell, because, as I mentioned, as long as they grow, then where it's trading right now is still undervalued. But I will have to value the company again with some other assumptions that reflect reality.
How do you feel about Adyen? Any thoughts on that? Maybe you did research on it, maybe not, but any thoughts on them against PayPal?
Not very deep research, but it's a very good company. I mean, it's a high quality company. It's very expensive the way it trades, and for good reason, perhaps. I mean, I was looking for some mittens. You know, the winter is really harsh here in Sweden. We're talking like minus 25, minus 30 degrees Celsius where I live. I don't know what that is in Fahrenheit, but it's very, very effing cold. Let's put it that way. And I was checking out at H&M, and I see it's powered by Adyen. I'm like, I know this company. What else are they powering? So I started looking, and they're actually really integrated throughout Europe mainly, and globally as well. It's a very good company. I don't know too much about it, actually.
Okay. Crossroad says, asking about divestiture of Happy Returns and other parts of the business in the future, like Zoom or Honey. Yeah, I remember they acquired Honey. Any thoughts about their acquisitions and subsidiary plays they have?
Yeah, I mean, they have, as we mentioned, they went on an acquiring spree. I know they bought a very high quality company in Japan, and a bunch of others, but many of them don't fit into the ecosystem. They don't play well together with like PayPal's main strategy. I mean, Happy Returns, they sold it and it made a lot of sense. I didn't see it fit in, and I think it's an active decision by Alexx Chriss to actually downscale the things which simply aren't working. And I think they actually made money on selling Happy Returns compared to what they bought it for. But I mean, I'm not expecting that for any other sales. I just think that they need to refocus. They need to get rid of whatever is not working, whatever they don't see a future for within their product portfolio. I think they need to streamline more, not spread themselves too thin with companies that aren't bringing anything to the company as a whole. So I think they're actively doing something, and it's very good to see as an investor that it's not being ignored. Like, it's not an elephant in the room. They're like, no, this is not working. Get rid of it. And I'm expecting more to get cut the coming quarters. Actually, you just need to find a buyer, I would presume. But I'm not an expert on all the side companies, all the acquisitions and what they bring, because they don't report in detail on them. So I don't know the financial results. We can only guess that Happy Returns didn't do well. We don't have actually Happy Returns spun out in the filings to know exactly. So
are layoffs coming? Spotify did layoffs, Discord did layoffs, Instagram did layoffs, Google did layoffs, Citigroup's doing 20,000 layoffs. Do you think
it's an interesting one. I mean, there was a week, I think back in December or November, where it was all the hype to talk about how bloated PayPal is. Like, oh my God, they have so many employees. But it wasn't actually that bad.
Right.
If you divide, one thing we usually do with Palantir, for example, and compare with Snowflake, we compare with C3 AI, with IBM, with ServiceNow, is we look at how efficient are the employees. So we take the revenue and we divide it by the employee number. And actually, PayPal was really high up there. I mean, in parity with MasterCard, that's viewed like as really high quality company, right? I mean, they're doing worse than Visa, but I mean, they're not that bad at all. But yes, I do think they're gonna call their employee force 10%, 15%, at most 20%.
They did 7% in the summer, right? So they did do some. But yeah, you're right. I mean, they do have. I think it was February. It was a while ago.
I think it was a huge discussion because people just look at the plain employee count. They don't put it into relation with anything else, and that's really dangerous to do. I mean, the employee force is pretty efficient as is. It's not a disaster by any means. I think it's in accordance to the mean of the market in that space, so it's fine, but I would assume that they're gonna cut some more.
Right. The analyst downgrade. So JP Morgan or Morgan Stanley, I always get confused where they're from, but he downgraded it from 118 to 66, which is very weird. I mean, why do you think that happened?
I haven't actually read the report. Is there any headline tied to that? Like, what's the reasoning?
From my understanding, it was just competition. Like that. What I got from the report is just that it's very competitive. But like a 50% downgrade was like,
yeah,
did you not know that 7 months ago, 3 months ago?
No, I don't see it at all. It makes no sense to me. Apparently, it's some pretty good analysts, like historically speaking, but it makes no sense to me. I don't know. I never put any consideration into multiples, for example. Like the pricing of a company means nothing to me. So like price to sales, PE ratios, like I value the company by looking at the projected cash flows and the present value, and then the risk associated with that. I never look at pricing. I never look at charts. I get a quote when I'm done with my evaluation to see if it's under or overvalued, and that's it basically. So I'm really not sure what they're seeing. Perhaps it's not so numbers related. It's probably market mood related, right? Because they have to give a time frame. Usually it's 6 to 12 months with their price targets.
Right.
So probably it's not perhaps with the quality of the company, but rather he sees a bleak outlook in the foreseeable future, just in terms of price of the stock. So it could be that, because I don't see it I think the company is moving in a positive direction and not a negative one, which would justify that.
Right. And as Moss Capital says in the chat, Morgan Stanley downgraded Meta October 27th, 2022. So, I mean, these downgrades do come.
Yeah, it happens. Yeah. But as I mentioned, you have also to keep in mind, it's not only the company. They have to factor in what they expect the market to do.
Right.
The S&P price prediction start of 2023, everyone was wrong. But every time you do a price target, you have to incorporate that, how is the market mood going to affect the price of this stock? So it's not only the company when the analysts do their price targets, it's also the other factors of the market and the mood of it.
What is your entry price on PayPal, or what was?
My entry price,
or whatever your average, whatever.
Or my cost cost basis, right?
Yeah, cost basis.
It's 59, I think.
59.
59,
Okay.
yeah.
Cool.
I would actively buy at this price as well. I think I would feel confident buying under, like, to get a good return on my intrinsic value. I would and still have a lot of margin of safety. I think up to 80 or 90 I would be comfortable buying, but I mean, I have such a big allocation, and there are so many other good quality companies out there that I don't want to go over 60% right now.
Could Elon buy PayPal or buy SoFi and use X in the payment space to compete with PayPal? Does this argument at all make any sense to you about Elon's coming for PayPal's launch?
Do you know about his history with PayPal?
I do.
I'm curious if everyone does, but yeah, it's funny actually. He recently announced like XPay or whatever it's called.
Yes,
Like his
XPay. Yeah. Yep.
peer-to-peer. Yeah, I mean, I don't know. I don't think he's gonna buy PayPal now. I don't think it's gonna integrate with X. I think he has his own plans to build out his own product in his quest to make X the all app or whatever he called the concept. And funny enough, I think he's gonna make it by the end. But I mean, who knows? With time horizons and Elon, it could be a very long time.
Yeah. Yeah, I agree. I mean, look, I think Elon could give them a threat, but it's. I mean, they've got a lot to work on before they even come close to really.
Yeah, and at the end of the day, it's just like one vertical, right? As PayPal themselves mentioned, no one does all three spaces. Like no one competes in all three, and no one can provide the whole ecosystem the way they can. So, yeah, just add another payment option on the checkout page. I mean, PayPal can make money anyway. Like probably the next update of Braintree already has like X as a checkout option, and they're gonna make money when you check out with X anyway. So I mean, I'm not too worried about Elon's entry to the markets right now. At least we'll see.
Okay. Last thing I want to talk to you about. Two-part question. Number one is the crypto markets in regards to PayPal. They do have some crypto part of their business and the stablecoin, and I have no fucking clue what the stablecoin is. I don't know why they introduced it, but they've introduced it. I don't know if you have any thoughts on that. And number two, I wanted to get your general thoughts about Bitcoin reaching 49,000, down about 8%, now at 43,000, and your argument that I think a lot of people would be interested to hear about. I'm going to clip this and put it on X around why you think buying Bitcoin is idiotic or it doesn't really make sense in the general sphere of the crypto universe. So start with PayPal and crypto, and then we'll transition to Bitcoin.
Yeah, basically it's a vehicle to increase margins, make transactions cheaper. So it makes a lot of sense to incorporate something like a stablecoin throughout their services. I mean, making remittances. I mean, I recall a story you told where you used Bitcoin to transfer to a different country. So I think like there are a lot of scenarios where a stablecoin makes sense, where you don't have to apply all the different bank fees and stuff like that. So I think a stablecoin makes sense. The actual impact, we don't know. It's not been reported on. Another thing I hope Alexx Chriss changes moving forwards, and that they disclose more plans. I think Crossroads on Twitter, if you're curious about the stablecoin, I think he posts actively on it. And a lot of things actually make a lot of sense in the whole grand scheme of things for PayPal. And to my understanding, it's gaining a lot of traction as well. Like looking at total volumes. But I think margins are the main thing. They want to increase their margins, and stablecoin is a good vehicle for that.
Okay, cool. And then finally, let's end it off here. Probably a good 15-20 minute discussion on crypto. I'm here to gently push back at you. I'm not getting into a full-on debate, but I do want to know an asset that has moved up about 200% last year, obviously doing very well. The ETFs just got approved. Larry Fink, who was bearish, is now bullish. The SEC has legitimized the asset. How do you feel about people buying a percentage of their portfolio in Bitcoin?
Well, actually, I'm very curious about Bitcoin. I understand that we might have a future where cryptocurrencies are a real thing. The world might be moving towards that, but I don't really see it in Bitcoin. And I'm really open-minded. I want to try to understand it, but I'm never finding answers to questions that I do have. So the first argument is that Bitcoin serves as millennial gold, digital gold, right? You heard that argument. So the first test of that is, what does Bitcoin do during crises? Does it keep its value, or does it move?
Decline, right?
Yeah, right. It behaves even more volatile than high risk stocks. So it's like a levered way to own risky stocks.
Right.
So I don't really understand that argument of it being digital gold or a store of value. The next argument is that it's a digital currency, right? So the question you ask yourself is, what is a good currency? We have good currencies in the world in terms of national currencies. We have bad ones, we have mediocre ones, and we have great ones, right?
Yeah.
So does it behave like a currency? Like, is it stable? Can it be adopted? What happens? How does it protect people? There's no central bank tied to it. So how is that meant to work in real life? Like, no one
you don't
buys
think
Bitcoin.
the open blockchain ledger transparency thing is enough to replicate the benefits of like a central bank and the protection it offers, essentially?
In terms of Bitcoin,
Yeah.
no. What's
I
the,
kind
I
of agree
mean,
with you.
okay, let's say that it's incorporated today, right? Let's say that you're a store clerk. You are changing out what the price of milk is 73 times per day because it's moving so, like, it's so volatile. And when you return to the store tomorrow, Bitcoin has crashed by 40%, and suddenly, like, you don't have any margins on your product. So, and then you come back the next day and it's doubled, and you're like, what do I do now? Like, it doesn't behave like a currency. So I don't understand why it's deemed a digital currency when it doesn't behave like one. I don't see why it's deemed as digital gold when it doesn't behave like gold.
So let's talk to the store of value then, right? The digital gold part, forget the currency part, forget the utility. Let's just say store of value, which is what Larry Fink was talking about yesterday. The asset's the best performing asset of all time, right? And presumably, I find it hard to believe from the charts I've seen. Yes, I mean it's maybe I'm wrong on the technicalities, but it has outperformed a lot of assets over the past 10 years, ever since 2013 when it really started. Why wouldn't you buy it off the sheer fact that it might go to 150,000 just based off the fact that there's only 21 million in circulation? There is a higher amount of demand that is chasing a fixed amount of supply. Is that not an argument for buying Bitcoin?
Well, let's just clear the first two we touched on. It's not a currency because no one bought Bitcoin intending to use it as a currency, right? Like, you're deluding yourself. If you buy Bitcoin, you're like, well, I'm going to transact with this. No, you bought it because you have the expectation that it's going to move up, right?
Right.
And it's not a digital gold because you don't expect it to stay flat. Like, you know that if the world ends tomorrow, at least your Bitcoin is going to be worth, you're going to be able to exchange it for the same value you bought it for, right? No one buys it for that. But it all comes back to, you're buying it with the expectation of it going up.
Right.
But I don't see what's telling me that it's worth more or that it's worth less. So that's the main argument I have. I mean, people told me, like, well, it's just supply and demand. I'm like, well, it says nothing about future potential, right? Nikola can move up 20% market open tomorrow due to supply and demand, but it has no real weight as to what the value of the asset, right? And I can't make an investment just based on pure speculation. Like, it's a trading instrument, is my argument. All these other factors, I mean, I listen religiously to your show, right? Finance Junkies. I've heard so much talk about, well, you can't trust fiscal policy. You can't trust central banks. They're gonna print money. I mean, first of all, okay, let's leave that side. I hear all these arguments why you should buy Bitcoin, but in the next sentence, in the same breath, they say like discussing exit strategy. So they're saying this is the future of the world, and I can't wait to sell it to go back to dollars. I'm like, it's a trading instrument, and
but isn't that enough? Is that the worst idea in the world, that you're buying it at 40, hoping to get rid of it at 80? Is that because someone else wants to buy it from you at 80? You know,
for me, yes. And I'm okay if you are saying that, like, well, yes, I have this rainbow chart, and I believe it's going to be true that if it follows this chart, which I think it will, it's going to be worth this.
Right.
That's one thing. But I'm hearing all these arguments about Bitcoin, how it's the greatest gift to mankind, and all these arguments, and all of them can be disputed, and like there's no truth to it. I mean, I hear Bitcoin is going to $100,000, right?
Yeah. Kathy was at 600,000.
Yeah.
Well,
but
based on the fact that there is a limited amount of supply and more demand. I mean, that's the most simplistic way I can.
And how do you extrapolate demand? And the demand is going to reach that. I mean, it's just pure speculation, right?
It is. I mean, one argument you could say that, for example, the ETF approval means more pension funds want more speculation in their portfolios. Therefore, you can kind of hypothetically calculate more demand, right? There are some.
Do you introduce speculative assets in your pension funds in the US? We don't do that in Sweden, at least.
Like, well, we'll see over the next 5 years.
You don't introduce risk and volatility to a pension fund. But I mean, yes, you are right. There are going to be people that want exposure to this trading instrument. And if you're all right with calling it a trading instrument, then I don't have any argument against you. I'm completely fine with that.
Right.
It's when you start talking about it being like something else, something greater, like you start touting it as the next this or the next this, and there's no evidence of it being that's when I start to be like, well, hold on. That pertains to Bitcoin. Of course, I know that Ethereum has actual use cases, like it could behave like a commodity because it actually is used actively. I believe that we might be in a future where smart contracts are actually incorporated in vast parts of the economy, for example. I can see that. But when you're talking about Bitcoin and you're giving all these arguments why, well, one Bitcoin is always going to be one Bitcoin. Like there's no inflation, it's set supply, it's all this. And the next sentence is like, well, I can't wait to sell it at 100K. I'm like, what are we even discussing here? Like, you're not a believer. You didn't buy Bitcoin to transact with it. You didn't buy Bitcoin to have it be worth $42,000 because you bought it at that and wait 5 years, it's going to be worth the same. I mean, that's not why you bought it. You bought it with the expectation that it's going to increase in value because you have the expectation that someone is going to buy it from you at a higher price. And I'm fine with that. But you have to be honest with yourself regarding that as well, right? So that's all I'm saying. I'm saying I don't see this as our savior to save us from the evil bankers. I mean, it's not what it is. It's a trading instrument, and it's doing a very good job of that. It provides a lot of volatility. It frequently has a lot of volume, and I'm completely fine with that.
So I actually really agree with you. I think it's good we got on this call because that is where I think we find a lot of common ground. Like, to me, I see the utility in Bitcoin as a level of currency from my own anecdotal experiences. I paid, I've said this before, I paid a guy in Nigeria $1,000 in Bitcoin. Yeah. I got a valuable service. He didn't want anything else other than Bitcoin, right? And I needed his services. So that's where it's valuable to me. But I agree with you. The far majority of people are not using this to transact money, especially not thousands of dollars, right? You're talking about hundreds of thousands maybe, but a couple $1,000, like, no one's using it for that. There's a lot of other currencies that are easier.
Just an example, you made that transaction when?
Like a week ago?
Yeah, a week ago. And the guy has lost how much on that? Like, you basically lost.
Well, I sent it at 43, so he's down. He lost a little, but if I sent it yesterday or at 49,000, then correct, he would have lost 10% of it.
Yeah, I mean, that's why I don't see it as a good vehicle for that type of service. I mean, of course, it has use cases, it has utilities, but it's not like You can't tell me, well, because I could send a guy in Nigeria money, it's going to 150K, it's going to 500K. Like, I don't understand these price targets.
Right.
If you're saying like, I speculate it will go here, I'm praying someone's gonna buy it at that price, I don't know, then I don't have an argument against that. But I don't understand how you can.
Yeah, and that's actually the the broader thing that I think I've been very public about this on my channel as well. I've said this many times explicitly that I want to make money off of Bitcoin. I don't give a shit about Bitcoin. I don't care if it goes if it goes to 80,000 and some options I have do very well, I'm very happy. But I will sell those options for fiat dollars because at the end of the day, I don't know what I'm going to be doing with that. I can't go to McDonald's and use it. Maybe that changes in the future. And maybe the thesis changes, but as of now, that's not changing. So I agree with you. As a speculative trading asset, it is, or instrument, better word, it can be used in a meaningful way. And that means that it might actually go to 600,000 one day if so many people feel like that. But in terms of utility, I also agree there's probably not that much utility as well.
Yeah, I mean, I'm not disregarding cryptos as a whole. As we mentioned, like, there are some very innovative ways being developed to utilize them, incorporate them. I just think that if there is going to be a digital currency in the future, I think it's going to come from a central bank, and it's going to have regulation to protect the currency and protect the people using it. And there's going to be guarantees tied to that. It's why the US dollar is so strong. I mean, fiscal policy is there for a reason. I mean, stimulating an economy is not something everyone wants to do, but there is a necessity to do it sometimes. I mean, it's not inherently evil or bad. I mean,
let me ask this question to you. Matt says you can't use a house to buy or sell goods or services, but you can take out loans or notes against it in USD. Why is Bitcoin different from that?
It's too volatile. I mentioned it, like your house. How often is a house priced? At best, if there's a similar one in the same neighborhood, I mean, it might be sold like once a year, maybe. Maybe it's 5 years until a house is sold and you get a repricing, right? But I mean, Bitcoin, I mean, it can go down or up 20, 30, 50% in a single trading day. I mean, no one's gonna take out credit against that. It would be stupid, right?
Right. And I mean, I think the same thing here when Matt says stocks aren't I mean, stocks are also volatile, but the volatility of Bitcoin, I think we can all objectively agree is.
Stocks are volatile. That's why I don't really put much thought into the pricing of a stock. When I buy PayPal, I don't compare the PE ratio of PayPal to something else because the mood of the market might say that 15 PE is cheap today. It might be expensive tomorrow.
Right.
No, I look at the actual value. And you can't do that with houses, and you can't do that with Bitcoin. You can't value a house the same way you would value a stock. It doesn't work. You can't like, well, this type of wood went into building the floors, and then this tapestry cost this at the time of purchase, so it's worth this. Like, you can't do a valuation of a house. You have to price it. And the same goes for Bitcoin. It doesn't have anything tangible to value it off of. Right. So it's simply pricing, and for that reason, it's a trading vehicle in my eyes. And I'm really open to it. I mean, I'm not a Bitcoin hater.
And I want to say also your wife does certain types of trading that is, I would say, very speculative, right?
Yeah, she's a forex trader and is really interested in a lot of things I'm not interested in. For example,
so everyone who hates Emir for like being this kind of crypto bear, the literal woman who's the mother of his child is speculating all day and making more money than you. But your argument is that it's okay as long as you're honest about speculation. But
I mean,
dream that you're not speculating based
on. I'm okay with arguments for Bitcoin and its potential utility, but I want to hear arguments backing that which are rooted in reality. I mean, if you're telling me that it's digital gold, then you need to have some basis for that, right?
Right.
It shouldn't be possible to disprove it in 5 minutes. Like, that's all I'm saying.
Okay. This is fun, man. This was great. I think people really, really enjoyed it. Thank you, everybody, for being here and joining us on a Saturday evening. I'm doing another stream in about 30 minutes with Hassan, who runs a channel around CRISPR and therapeutics. So we're going to talk about genomics and that exciting world, very different from the fintech space, but exciting nonetheless. Emir's Twitter, I'm putting in the description. And I think people should follow him because he's going to start posting more now that he is officially becoming a content creator. And his Seeking Alpha article I'm posting here as well. Please just click on it and just leave your computer on it so Seeking Alpha can track the analytics and show that there's a ton of time spent on the article so that we can get him to write some more. Thank you, everybody. This was awesome. We enjoyed it. Emir, we will do this very soon again on a different stock. I appreciate it.
Hopefully.
All right. Thank you, everybody. Have a good day. Bye-bye.